Welcome back, everybody. Buying a home can be an overwhelming task, especially in some of the booming areas of North Texas. And sometimes online reports and housing report data can only add to all the confusion. So joining us this morning to give us a little bit of clarity is James Armstrong. He's the president and CEO of Builders of Hope Community Development. Welcome. Glad you can join us here on Daybreak.
Good morning. Absolutely.
Hey, I've been covering the housing market this past year, and
Yeah.
I'm sure you've seen it. It is all over the place. We've got those high interest rates right now, particularly in this current market. What is the general rule of thumb to determine how much house a buyer can afford?
Yeah. So as you said, the market hasn't been kind to buyers, right? We're in an inflationary environment. Housing costs are going up. Supply is dwindling down. And it really is almost like a perfect storm for potential homeowners. And so what we say is, we never try to persuade someone not to get into the homeownership journey. Start early. But when you think about affordability, the interest rate does erode a buyer's affordability. And so what we're looking at now is to try to understand what you can afford in this market. A simple rule of thumb is to just multiply your income by 3. But banks are going to look into things a little bit more in depth, like front-end ratios, which is really what the ratio between your housing expense and your income. And so what you can afford. And that usually is around 28%.
And of course, you got to get those financial documents together. What are those that folks need to be collecting? So
I say credit, anything that talks to credit, anything that talks to income, anything that talks to employment, really everything that would give a mortgage lender a full picture of your financial situation.
Down payments can help greatly. So when should they be starting for that, and how much should they save for a down payment?
So the industry standard is 20%, which can be a lot for some people. But there are programs out there on the market that will help buyers, especially first-time buyers. You have things like the city's down payment assistance program. You have down payment programs through the Federal Home Loan Bank. Even some lenders might provide down payment assistance, no closing costs, no PMI, private mortgage insurance. So you want to do your research. You want to get out there early. If you're thinking about buying a home in the next 2 years, now is the perfect time to start.
A lot of resources out there, and obviously be sure to talk to your realtor about that. What other considerations should buyers make after closing on a home?
So I say, number one, you have to understand that a house is something you have to manage, right? So you want to be sure that when you get in the house that you can afford it. You can live comfortably, you can still go out to eat, you can still do things with your kids. The next thing is maintenance, right? So buying
You're
a
not
house,
renting anymore, you know?
Exactly, right? You can't call the maintenance man to come fix the garbage disposal, right? So you want to create a budget for your maintenance. And then because we're in this inflationary environment, you want to talk about modification. So the 3 M's, maintenance, you want to talk about manageability, and then modification. After interest rates go back down, you want to look at refinancing. Don't not buy a house because interest rates are high. Buy something that you need, not what you absolutely want, right? Buy something that you can manage now. That could potentially be an investment property later on.
There are a lot of factors to look at when buying a home. James, we appreciate your time.
Absolutely.
Now, if you have questions and you want to reach out to Builders of Hope Community and Development Corporation, that is, visit bohcdc.com. Glad to have you.